Hi, I'm Stewart Scothorn with the Long Term Care Link. I'm here with our Chief Marketing Officer at the Long Term Care Link, Tobi Roberts. And we're going to have a chat today about long term care insurance and what we see going on the market with our clients and the needs that are out there in the marketplace. Toby, just give me a basic what is long term care insurance?
So, long term care insurance, simply put, is the coverage for your long term care needs when you lose the ability to do a couple of ADLs or assisted daily living activities. So, think of it as in home care, custodial care, nursing homes, skilled nursing, those types of items. That's what long term care is. And what we really want to go through today is kind of the state of the market because I don't think a lot of people understand really what is happening in long-term care, especially when they start to get it later in life. So let's talk a little bit, if we can, about just the state of long-term care, traditional long-term care insurance. What do you see happening?
Well, there's no doubt because what we have right now with the baby boomers, that's the biggest component of the population mix that's right now. And we are just now beginning to see them turn into their 80s. So remember, long term care insurance again is going to be when somebody needs custodial care, nursing homes, skilled nursing, memory centers, things that we never want to talk about or think about. This is that end of life stage, and sometimes not the end of life stage that people go through to have that level of care that they're going to need. And right now, because you have to plan for that, it's like any insurance that you get, you need to have the insurance before you use it. So the market in general, if I look 10 or 20 years ago, there were many insurance carriers that wanted to be able to serve that market. And now we're down to about two insurance companies that I'm aware of that are actually in the market doing long-term care insurance.
Yeah, and which is really a crazy thought when you consider 20 years ago there were a dozen, 15, 20 carriers that had this as an offering, and we're down to two. And not only that, but traditional long-term care insurance, the price just continues to skyrocket through the roof.
We have clients that have policies that are perhaps 20 years old. I know you know this, but you are looking at quadrupling in a year. And they're thinking, what in the world? There is no way that I can go from $200 to $800. And they'll see things that are increases like that. Part of it is because of healthcare costs in general. You're not going to slow that process down. But from the other standpoint, you got to remember you have fewer carriers. So they've kind of got a captive market in some regards too. And they're not going to do what all of the other carriers that got out of the market did. They ended up taking losses and leaving the market. They want to continue to keep this book of business that way. But for the average person, what are you going to do if you're down to two carriers? Because could you even qualify? I mean, what are the qualifications
Yeah,
for?
when you start looking at the qualifications, uh, if you get into your 60s, 70s, 80s, we know as we age, we're not getting healthier in most cases. And when you go to qualify, you know, we're seeing numbers between 30 and 60% sometimes that people are being rejected or they're not meeting the qualifications when it comes to underwriting. So their health is just keeping them out of even having that opportunity. So what does a person do when the traditional option is no longer an option? You've got to start looking at different opportunities, and that's really what we want to talk about today is the hybrid opportunities that a person can do. So the first one we want to go through is if you can't get traditional long-term care insurance, let's talk about short-term care and how that might be an option um, for it. So what are you seeing in short-term care? I know you deal a lot in this.
Well, we see that as an option because as soon as you age, as you said, maybe there were a couple of people that walked on this earth that got healthier that, if we look at Jesus, Elijah, and Enoch, maybe they did get healthier. But the rest of
Yeah.
us are probably going to go by the way of the grave. And so part of that process is just as we age, we're not going to be able to gain our health to a level that's increasing. It usually decreases. So at some point in time, 70% of the people are going to need that custodial care. So how do you handle that if you know they can't qualify for long-term care? Short-term care is an option because long-term care would be 1 year and longer. Short-term care is 1 year and shorter. Something in my mind is always better than nothing. And so that's something that we're seeing a lot of our clients gravitate towards. It is a less expensive option, it's easier to get approved. So those are the two things that I would say we need to look at that as an option. And the reality is, we can even do that for somebody that's in their 80s.
Yep. And
So all of those
I love
things that
that.
become an issue, I think, become something that we see and it's not something that's been around a long time. So it's a
Mhm.
fairly new product, even though it might have been around. It is much more popular today because it has to be. There's nothing else that's out there. So this is something that I think would work for virtually anybody that's looking at saying, what am I going to do if I have these costs? At least you've got 360 days that you can say, I know I'm going to be taken care of. And like it or not, those numbers per month could be as much as $20,000
Yeah,
a month.
you get in a memory care facility, something like that, Alzheimer's, dementia. uh, those numbers can get very expensive, and we hear people say it's a bomb on your retirement, and it really is. I mean, if you start thinking about how much you have saved, and you start eating away at that $20,000 a month at a time, and what we see is people are not going to get care. Like, you're not going to avoid getting care for your mother, your father, for the patriarch, the matriarch, the family. You're not going to avoid it. You're going to dip into your savings.
Yeah.
You're going to,
The children, the uncle, the aunts. I mean, we see it all the time. Everybody says, "Well, I'll take care of that when the time comes. I'll just self fund." So that's a terminology. Tell me a little bit about what your perspective is on self funding a long term care or short term care costs, for that matter.
yeah, so self funding is what we typically hear when people are saying, I'm just going to use the money that I've saved. But, but why? Why would you even do that when there are better options that set you up financially to take care of that? The- You don't self fund a car wreck. You
That's a
no,
good
you
point.
get
That's
you
a
get
good point.
insurance that protects you and pays that bill because you don't want to use all of your savings.
Yeah, you buy a car for $20,000 and you set $20,000 aside. I'm self funding for a car accident.
Right? No, no one does that. And so when we look at short-term care, it's protection so that you don't have to dip into these things. So I don't know why you would ever use that as a financial vehicle. When we start thinking about, how do we protect ourselves as we get into our 40s, 50s, 60s? How do we protect that so we don't lose that?
Well, in one case, you and I understand this. Look, some of the premiums that we see for even a long-term care policy, they're going to be over $1,000 depending on your
Yeah.
age and what you want and all the. So we understand somebody doesn't want to pay a huge premium, but what would be somebody's options if they said, "Look, I'm not going to pay the short-term care premium, even though that's much less than what the long-term care premium is." What would be some of the options that would be available?
Yeah. So the short-term care premium. So if you mentioned the long-term care premium, up to $1,000
Right,
we've seen. Short-term care premiums, you're looking, somewhere in the range of 150 to maybe $300, give or
right.
take, depending on your health and how long you want it to serve you. But outside of that, there's other hybrid options. So the first one is really a life insurance policy, to where you can get life insurance, but if you did have that long-term care event that you needed, you get to draw down from that life insurance policy tax free. That's the part I love about it the most on that. And if you don't end up needing, if you end up in that 30% that don't have a long term care event, it's a life insurance policy that you could use as a legacy.
So it's actually a cash value that's accruing over the
Yes,
course of time, just like a whole life policy would be. That's what that would look like.
exactly. And I don't know anybody who wouldn't say that's a better option than self funding. Why would you not? If you're going to self fund, you're probably already looking at life insurance of how to take care of your family on the backside of things. If something were to happen to you,
Right.
it's far better than a self fund option because at least you have the life insurance if you
Right.
don't need it.
Well, is there anything else that you think, if it was you personally, and we're now talking about you, Toby,
Yeah.
what is it that you would do personally if you were to look at how am I gonna handle this long-term care equation? And let me just say this: when does somebody need to start looking at long-term care?
Yesterday. Yeah, you start thinking, a lot of people think, oh, it's a long term care policy. I'll get it when I need it. You mentioned at the start of this, like, this is not a you need it product that, like, get it when you need it. This is a get it before you need it because you can't get it later. If you end up needing long term care, chances are you're not qualifying for something.
Right.
There's only one product on the market that I have seen that you can get guaranteed approval, and that I think that's probably what you were alluding to. What I would do, me personally, I'm getting an annuity, and I'm going to use that annuity. There's a couple of carriers in the market that have a product that we would look at, and I'm getting that annuity, and I'm going to say, all right, I'm going to let this grow. I'm not going to touch it. This is going to be for me, for my wife, and I'm not touching it. This is money that I'm setting aside specifically to cover long-term care. If one of us don't need it, I've got an annuity that continues to grow at 3, 4, 5%,
Right.
and my accumulation on that after 5 to 10 years is going to far outweigh anything that I might do. And if I need it, like I end up at that 70%, then I can draw out of that annuity again, tax free. But the best part about it, and what I love about that product more than the life insurance, is really the annuitization of it. Life insurance, you're still going to pay the premium on that in a lot of cases, and then there's no real growth to it.
Right.
Why would you not put it in something that has the ability to grow?
That it
And
would still give you a death benefit, still give you
exactly
the
right.
growth in the account, and also be able. I think we're on the same page. And actually, Toby, what you have recommended is what I've done for my family. My wife and I have exactly that product, and I can say I believe in the product because I have the product. And the way I perceived it was the same way that you were trying to explain it. Look, I need the coverage. The sooner that I can possibly put myself in a situation that I can have money set aside that's going to continue to grow, the bigger the benefit comes if, in fact, I ever need it. However, even if I have very poor health, there is a guarantee
Guaranteed.
that you are
If
going
you
to
are,
be able to
yeah,
get, even if I
yeah,
was right now in a rest home.
exactly. If you were in a rest home right now and chose to invest in that annuity, you're guaranteed to be approved. And with one of the products in the market, we won't mention any names right now, but that product will give you a bump in your investment. And so you'll get a multiplier on it. So immediately you end up with more money than you ever put into it.
So when you say a multiplier, if I put in $1,
Mhm.
I could get as much as $3 in benefits.
Yep. Depending on your health, obviously there's health
Right.
qualifications of what
But
level
if
you
I
qualify
didn't
for. But yeah,
have if I didn't have any
yep.
questions for health, it would still be more than $1?
Still be more than $1.
Well,
So
then why wouldn't somebody do that anyway? And
so
and part of it is part of the planning process.
yeah.
Let me just close with this thought to everybody and anybody that happens to be watching. One of the things that we want to be able to serve you at is to give you this information that in terms of bridges out, turns in the road, or things that maybe you can't see, we want to be able to serve you in a way maybe you didn't think about. But by far and away, one of the biggest traps that we've seen in retirement is somebody that hasn't thought through the long term care equation. It is something that you need to plan for. We would love to serve you in any way, shape, or form we can. So I would encourage you, give us a call. Let us serve you at that level. Thank you. And we appreciate hearing from you and serving you.